Welcome to the weekly wrap up. Lots of interest rate information and movement this week. So, first of all, we are ending the week about an eighth higher, or excuse me, an eighth better than where we started the week. Unfortunately, Wednesday and Thursday, we were about 3/8 of a point better than where we started the week. So this week, Fed Chairman Powell spoke. He increased the federal funds rate 0.25%. Keep in mind that is not our interest rates. Actually, we saw our interest rates improve after he actually made that movement because we priced it in way before that. So federal funds rate is what banks change money at. Car loans, home equity lines of credit, credit cards, things like that is what is directly affected by that increase. He said, hey, I think we're going to be able to pause after this. But the other thing that I thought was really crazy that he talked about was how resilient the banking world was and how that is very strong. Yet this morning, we have two more banks that are on the watch list for being raising capital and being challenged with people having a run and pulling their money out. Both of those banks are on the West Coast, which seems to be kind of the problematic area. If one of these banks fail and has to be taken on by another bank or by the Federal Reserve, the amount of assets between the three previous bank failures and this one would actually exceed the amount of bank failures that we lived through in 2008, which is crazy to me. I think that is a really telltale sign about how this economy has got a lot of underlying challenges that are going to yet to unravel. This morning, jobs numbers came out. They were higher than expected. Interest rates moved a little bit on that, but the good thing that helped them was the previous 2 months jobs numbers were revised lower. So again, some of the headline numbers will come out and make some movement, but as they get reviewed and analyzed and adjusted, they come back down. So I think overall, in general, the economy is not nearly as strong as some of the numbers are showing us. Next week, May 10th, we have got CPI numbers that are coming out. This is the number that we have been waiting for. We think that this number will be quite a bit lower year over year. And this was going to start more of our trend to getting these interest rates moving in the downward direction. So guys, I have conversations every single day with clients about this. And should I wait for interest rates to come down? Should I wait for better rates in 6 months or a year? And my answer is always a question back. What do you think if interest rates come down will happen in this market? Shoom. We still don't have enough inventory, and it is going to cause that many more people to come back into the market because lower interest rate increases affordability. So I tell every client right now, I know it's ugly with the interest rates. I get it, but there are better days ahead. But I would rather you get into a home now and be able to take advantage of the interest rate when it comes down the road. If you guys have clients that want to talk through things or need some additional advice because they are just wavering or uncertain about this market, send them to us. We will chat with them about that and show them data that will show and give them some peace of mind about buying now. Thanks for watching.